talking about overseas properties. Still with me in the studio, Chris Immelman from Pam Golding Properties and Charles Duminy from Hayes, Matkovich and Associates. I've got to ask you, are you related?
Sure. Close enough to defend him vigorously, but distant enough not to have met him.
Okay, right.
Would love to.
Well, JP's cousin is our
cousin
guest.
JP.
Yeah, cousin JP, our guest in the studio this evening. Let's go a bit further afield here. Where are South Africans buying?
Other than the islands, I mean, clearly the islands have been really, you know, the focus in the last sort of 2 or 3 years. It really has. But I mean, for the last 10, 15 years, London has been, you know, a calling point for South Africans, clearly. We opened an office there about 10 years ago now to service exactly that. And it is just a place where South Africans find a natural affinity. They're used to the place. A lot of the guys have been there. Some of the kids are living there, that kind of thing. So the London of the world is going to always be on the radar screen of most South Africans that want to invest in property, and particularly international property, of course. So if you analyze London, we call it the Biltong Belt, which is this golden triangle in the southwest of London, sort of Putney, Wimbledon, that area. You
full
know,
of South Africans.
Full of South Africans.
Yeah.
If you don't bump into a South African, you bump into Nando's. You know, it's that kind of thing.
Yeah.
So they're all over the place here, but they feel at home there, feel comfortable there. And what we do is, you know, in terms of the London market, we go there and have a look at it carefully. You know, we got this association with Savills,
yes,
which is a huge international company, and they do what they call new builds. So they, you know, sign up an agreement with the large developers, reputable developers, and then bring those things out either to South Africa or particularly of late to the east, where they are just selling a huge amount of London properties. So, you know, people like it. They feel comfortable there. And, you know, today the rental demand is so high because people are not getting mortgages. And I was talking to a colleague of mine earlier this week where they said, you know, his daughter's a lawyer, young lawyer in London. She cannot buy an apartment because she can't get a deposit together. Deposit today is 40%. So young people are saying, well, you know, I can't, 40%, I can't get a deposit together because the banks aren't lending. So what does she do? She's now got to rent an apartment. So therefore, the guys that have the cash, your tenant is waiting at the door the minute you take the key. So you've got a guaranteed tenant and you've got a good yield going forward, which is really, you know, sort of the appeal. And there, you know, I think Charles was saying earlier, some people don't even see the property when they buy. And there, that often is the case. The people don't see the property because all they're wanting to buy is forward income.
Okay, but hang on. There are two things here about property in the UK.
Yeah.
A, is the legal system and going through that. I mean, it is a night. You can give birth to a child quicker than you can take ownership of a property in the UK. Ask me, I know that. Secondly, the tenants' rights are frightening. You can't do a thing.
Look, I think to a degree that's true. In fact, tenants' rights in South Africa have also changed dramatically since, you know, in the last couple of years. So it's getting very close to the system that they have in the UK. But, you know, the process is getting easier. I mean, we've just found now, we've just launched something about 2 months ago. We launched something in the Isle of Dogs, the Docklands of London, where, you know, if you buy in your own name and as a legal entity as opposed to in a company, it's actually quite simple. And these days, we bring the guys out with lawyers on either side, representing both the developer, the seller or the buyer. And if you got your paperwork in order, and you got a SARS approval, and you got SARB approval, South African Reserve Bank approval, then it's quite simple. It's really not that difficult. So once you've exchanged your initial document, you've got 21 days to get your documentation in order. Documentation in order really means that for a private individual, it means certified copy of your passport, certified copy of your ID, and proof of residential address. Those are the 3 documents you need, nothing more. Then as a South African, you need Reserve Bank approval, which you get within 5 or 7 days. And Bob's your uncle. 21 days later, you complete, sign the contract, and your tenant's waiting at the door. It actually is quite simple once you've worked it out. Where it becomes difficult, Jeremy, is if you go on your own and you try and source and find a property. If you go with a new build stuff, where you're going to pay clearly a little bit of a premium because it's new. But it then comes with a managing agent that'll bring your tenant to you. It comes with lawyers on both sides that'll bring the documentation to you. It comes with informative information about what you require before you purchase the property. And then, then it could be quite a seamless process. And we've done many of them, so we've seen it. So it could be seamless.
What sort of properties are being sold when I say what sort of, I'm meaning in numbers. Okay, so I've got my primary residence, excuse me, here in Johannesburg. Maybe I've got a coastal property in Plettenberg Bay. Maybe I've got a share in, I'm talking now, this is not me, I'm talking somebody who actually earns money, okay, real money.
I was going to say, long on property.
Somebody who owns a share in a game lodge in the Lowveld. Is that sort of person buying a property in Mauritius? Is the Mauritian property a second property or a third or a fourth? I mean, these oaks must have serious ammo.
Yeah, I think that applies to all offshore investment, be it a pure flat investment in London with tenants or luxury holiday property in Mauritius. It's certainly not the second, probably not the third. It's likely to be a fourth or fifth home. That's the profile of buyer that we're talking about. The guys that we chat to on a daily basis about getting their funds out of here and doing these offshore investments with, they probably own exactly the properties you've spoken about. I've chatted to 3 or 4 guys who've got exactly that profile. So that is precisely what we're talking about. We're talking about the profile of person who's already got 2, possibly 3 homes in South Africa. He doesn't necessarily want to put all his eggs in one basket. He likes the idea of a currency hedge. He likes the idea of a diversification, be it in terms of a rental income coupled with capital appreciation in London, or what Mauritius brings to the party, or what the Seychelles brings to the party.
Are you finding a lot of people moving their tax regime as a result of this opportunity now that's opened up in Mauritius? Because if you spend, what is it, 83 days or more, you can apply to have your tax taken over there. And the tax in Mauritius is 15%, which is a hell of a lot better than 45.
Sure.
Are there a lot of guys doing that?
There are a lot of guys who like to. There are a few more loops to jump through than purely investing in the property. When you invest in these properties, you get a residency, which then is the first step towards becoming a tax resident. You need to declare your intention to both authorities, and then you need to show that your income is not purely coming out of South Africa. So if you have a business that's deriving income on a worldwide basis, or just throughout Africa or something, there's no reason why you can't be tax-based in Mauritius in terms of your business and in terms of you personally. So there are certainly guys looking to do that.
If you were looking at anywhere in the world, where would you, and I'm actually saying you now, where would you buy a property right now? Let me make it easier.
Okay.
I will give you, because I'm loaded. Let me just pull out of the back of my pocket. I'll give you $500,000. There it is. You can see it.
Yeah.
That's the return the receiver gave me last year. Where would you put those $500,000 if you were buying a property?
Yeah, I'd go London. I'd go London, Jeremy. You know, I mean,
isn't it horribly overpriced?
Well, okay. Let me put it differently. I mean, I would like to say I'd go to the islands. Particularly, I'd like to go to the Seychelles because I love the Seychelles. Because there you get some return for your money, but you also get some usage out of it. I've got 2 young boys. They love, you know, the surf and the outdoors and the boats and stuff like that. So they'd love to use it and so on. But Dad might not be that wealthy. I might only have $500,000 and say, you know what, guys, I need this money to work for me from day one, and I need some sort of certainty about this. And not that there's not certainty in the islands. It's just that, you know, I mean, I always quote this, that there are more people studying English full-time in China than live in the United Kingdom. They eventually all want to buy an apartment in London. Every aspirational Middle Eastern guy wants to buy an apartment in London. We've seen it. These guys go out to Kuala Lumpur, they go to Singapore, they go to Hong Kong. They sell 40, 50, 60 apartments at a time. People want to live in London. And they're not making more land there. That's it. That's all the land they've got. So the apartments they're buying, you can be sure if you buy in the right area that you're going to have a tenant. So if it's purely investment driven, I'm going to buy in London. If my motives are a little differently, I want some capital upside, I want nice return, but I also want some enjoyment. Then I'd go to the islands, and I'd pick Seychelles because I have an affinity for it. I love it there. It's beautiful. But, you know, so one must work out in your personal circumstances. If I've only got the $500,000 to invest right now, I'd go buy myself an apartment in London. If I've got, listen, I've got a little bit of time to play with, and I want to get some enjoyment out of it, I'd go to Seychelles.
You're nodding?
Yeah, I think it makes a lot of sense. For $500,000, we're not talking the top end of the IRS market in Mauritius. You know, there we're talking about $2 million. But with $500,000...
Sure, it sounds shy, eh?
No, that was a good jump. Yeah. $500,000, you pick up something really nice in one of the RES schemes, which is the real estate schemes that Chris mentioned earlier, or maybe something in one of the hotel room schemes. So you get some sort of return as a fiscal justification, but you've still got a place in Mauritius to be able to use. For me, excuse me, Chris, I'm a bit younger than Chris. I'm, may not look it.
Thanks.
Would never have said that.
But I'd love to have a place there to be able to go and spend some of my time, some of the leave that I get and everything as well. So for me, that's a nice balance to have. I absolutely hear what Chris is saying, and I take that on board as well.
One of the issues that came up in conversation with a mate of mine who actually is looking at buying into one of your properties, I think it's the new one, La Belize. Okay. One of the issues he came up with was medical. What are the facilities like in the Seychelles and Mauritius? The medical facilities, because he said, you know, if something happens, I want to know that I can get treated.
Yeah, no, they're good. Yeah. They're good, and I must say that's one of the great things about Mauritius is there's the infrastructures there. There's good schooling. You know, the banking system is brilliant. You know, you can find as good a lawyer in Port Louis as you'll find in Johannesburg. You know, and same goes for medical facilities. Great medical facilities. People are now talking about the private hospitals coming there. There's international doctors there. So those kind of things are well catered for. You will not find the French leaving France to come and retire in Mauritius if those things aren't in place. And they're coming there to retire because the first thing they ask is, what about the medical? You know, I don't know if you found the same thing. That's what they ask. So those things are in place in Mauritius. Seychelles as well. The medical it's very good there. We got people living there. I mean, I've got a big staff there. You know, one guy cut his hand really badly on a fishing accident. Phoned me. He says, you know, great treatment at the hospital. He was delighted. So, you know, it's there.
Well, that's good to know because, I mean, it's those sort of things that actually make a development in a place like that work.
Good, correct.
Because people are, especially if you're looking at spending more and more time, the older you get in a place like that. Value for money?
Yeah, value for money. You know, I think, you know, we were saying earlier about the capital upliftment, and, you know, which is really important to remember because, you know, the schemes, particularly on the islands, only started 8 or 9 years ago. 2002, I think it was in Mauritius, and a little bit later in the Seychelles. And the point is that the early adopters, the pioneers, they're the guys that make money. And there's still opportunity for that. So value for money is all about what my return is going to be eventually. So the values of definitely in Mauritius have come off a little bit, whereas everything started at $1 million, $1.5 million, $2 million. We keep on telling the developers now, says, guys, listen, bring that back a little bit and the market will open up. So if you shop around and if you look around and, you know, phone either of us, you will find there is good value still to be had. Sure, there's some at the top end which you need to be careful of, and, you know, if you do your homework, you're going to find value.
So you would buy in London, you would buy in Mauritius. Jeez, these oaks have got Tom, eh? Yesterday, us, we just in broadcasting.